Finland. So Miss
Okay.
kind of a
Which one?
the one from Oulu. It might be that I don't mention the name kind of, but it was kind of a by Googling kind of a. She had been kind of writing an article or given an interview in saying that women are kind of reluctant to invest in cryptos because they are so risk averse, and kind of she was advising that cryptos are the way to go. And I thought that this is something, but kind of a making into zero hedge is kind of a it's a global, it's a big thing. So many followers, kind of a now the number one kind of cryptocurrency expert on that would be Miss Finland. So I tweeted something about say that okay, as a signal that I'm pretty old, an old school guy. Kind of this crypto market is so full of surprises that kind of the best experts come from totally from somewhere else than say finance department as we kind of old school academics. Okay, it was just one tweet. A couple of days afterwards, I got an email from a lady asking me that kind of a dear Professor Puttonen, I have always kind of respected your school and department and everything, but now I'm very worried about your tweet as kind of a, does it signal that you are kind of, you consider that kind of education or gender kind of may prevent, may kind of imply that people could not be experts on something like cryptocurrencies?
It's
like to her.
Yeah,
it was this Miss Finland's mother.
Really?
And I replied to her very politely and say that no, that's totally a misunderstanding. It's just kind of what I'm telling is that it is a world full of surprises that kind of I don't know about these kind of questions, but it looks that your daughter is very kind of aware of as a sign that kind of I would warmly welcome her, so that is her daughter, to join, as I have a course called Financial Markets and Institutions, if she was interested in kind of lecturing about cryptos. That all went well, but evidently kind of her daughter was not interested in kind of joining, but the mother was kind of everything was, end of the story was just okay. So kind of she said okay, now she finds kind of that it was not that I had nothing, that I had something against her daughter. But okay, now we are here. So,
but Vesa, is this your polite way of telling me that I'm actually your second choice to give this lecture? Your first choice to give this lecture is actually that Miss Onni lady. Let's see how this goes. If this doesn't go well,
take it as a signal that kind of this year I'm happy to kind of warmly welcome Mr. Finland, kind of a Eugen.
Let's do it.
Okay, so kind of now as we have 119 kind of students online, so
yeah,
great pleasure today kind of welcome Eugen Wu. So far the last topic that we were kind of discussing on this course was financial innovations. As if there was an innovation that say 15 years ago or even 10 years ago, somebody had told me or anybody that kind of this crypto market will grow in terms of the size and importance and everything kind of to where it is today, kind of I had not believed, I don't know if anybody had believed, but here we are. And this is such a new topic that kind of luckily we had kind of so people at my generation, so we have, I'm always interested in any new innovation, but this specific area is it's developing so fast that kind of a slow person as myself, kind of we find it hard time kind of to follow what is going on. Luckily today we had a great possible thinkable expert on this field, Eugen, who is not only kind of an expert on this field, the best thinkable in Finland. As we saw from your next week's Talouselämä kind of top 10 startup companies, Tesseract. Eugen is also our kind of former student. You used to take this course a couple of years ago.
I took all of your classes.
Okay,
like I think all of your classes, I took all of them.
Very kind of, I still remember you kind of being so active and kind of but not only that, but you have started a company, kind of which seems to be kind of doing pretty well, kind of so warmly welcome you and kind of what should we know about cryptos, yourself and Tesseract?
Yeah, so that's first of all, thank you so much for having me over here. It's such an honor to kind of come back to your school, and especially to give something back to where I learned most of the stuff that I know how to do today. And then also it's almost like an oxymoron type of experience for me to kind of come back to a lecture that I took myself back in the day. So first of all, thank you so much for having this opportunity, and for all of you guys online, the 125 folks or so, thank you so much for also taking your time and spare your attention to give us to give me the attention span of the next 90 minutes or so. So I think on this particular topic, the cryptocurrency market, as Vesa has kindly pointed out, is something that has gone through exponential and explosive growth in the past decade or so. So today, in the most relevant context possible, what I will do today is that I will try to introduce to you guys some of the fundamental concepts, as well as some of the stories that I personally gone through as an entrepreneur, specifically in the context of founding Tesseract in the space of cryptocurrencies. And then I will then make, so we've made this specific lecture material highly customized to at least what I've remembered of this class, which is that I will introduce the microstructure as well as the participants of the cryptocurrency financial market. And then to make it more relevant to what you guys have gone through with Vesa's lectures before, I will then compare and contrast some of the participants and the structure of the market to the traditional financial market to make it more relevant for you guys. So before we jump into the actual content itself, let's go through a few household items regarding the logistics of this particular lecture that we're going to go through. So this is actually one of the first time I'm doing a guest lecture over Zoom. So this is something that we're experimenting with some of the methods that we're using here. So I remember back in the days when I was sitting in your shoe, taking Vesa's class, one of the things that I've always wondered was that typically in a guest lecture, you will have an industry expert that come to the classes and then basically tell everybody a bunch of stuff that they think is relevant for them, right? So what I actually want to do here today is that I want to make this as interactive as humanly possible, given the constraints that Zoom has enforced upon us, right? So what I will do is that throughout this lecture, there will be some live polling in which I will require some input from you guys. And then Vesa has been nice enough to agree that he will monitor the chat window as we go. So should any one of you have any questions along the way, please just spit it into the chat window. I want to make this as kind of interactive, make it as relevant for you guys as much of that as possible, right? So as a first thing, what I would do is that to really think about what is it that I will tell you guys regarding what is super relevant for you. It's always important to understand the audience a little bit more. So if you can paste that link into the window, please. So if everybody go to the chat window, so what you will see there is that there is a link to a survey that has five, 6 questions. So please just go ahead and click on that, and so we can have a look at the results together, so that I can better filter through what people how I'm going to customize the input for the lecture today. Let's give it a second. Okay. Vesa, I think you should do that as well, FYI.
Yeah, it seems to work. Everything good?
Yeah. Let's just give it a second. I think out of the 100 people. Okay, so by the look of it, most of you have obviously heard about cryptocurrency. Okay, so this is not a single person who haven't. So that means, okay, I'm not talking to a complete blank here, which is great. Roughly 3/4 of you guys are confident enough to say that you'll be able to explain this thing to your mom and dad, which shows that you have like a decent amount of understanding of how the thing actually works. The inverse of that, 3/4 of you actually have some crypto. 3/4 of them haven't purchased any cryptocurrency, but roughly 1/4 of you have done that. So that's probably one of the highest ratio. I'm guessing, Vesa, you're one of the no people there. And roughly the same proportion here, with about 1/4 of you have never heard about, 3/4 of you have never heard about us. And then lastly, people wanna, okay. So here are like the 4 buckets of contents that I would like to go through today. And it seems to be the company and its origins, as well as the market participants, are like the hottest things that we want to do. Okay, so thank you for all of the inputs from all of you guys. I will use this as a foundation upon which we can have this lecture, and then without further ado, let's get into it. But before we go anywhere, there's one thing I would like to share with you here. So for those of you, here's a tweet from a guy called Mikko Leskala. I have no idea who this guy is until the folks at my firm brought this up to my attention today. So this loosely this is, by the way, a photo that we took out of the fundraising round right after that. I think for one of the newspaper, they wanted some photos, so we had a photo shoot, and this is what came out with it. And this guy essentially had a semi-sarcastic comment regarding the diversity in the investment industry, probably because we were all wearing like shirt and ties and whatnot. Vesa, do you remember this tweet?
Very much so, yes. I remember that, yeah.
And for those of you online who's wondering what the hell is Yichen showing us this particular tweet, the reason is because that our dear Professor Vesa actually liked it back in the days, which I also didn't know until earlier today. So the point I want to highlight here is that this is one of those things that where the appearance and reality is very much different. I think during the 4 years that I'm running startup, that's probably the only day that I put on a suit jacket, and that applies for most of them. And the only reason this happened is because everyone else, the photographer told us, like, try to look formal and nice. Maybe wear a suit since you work in finance. So all of us actually have to go there and dig out some suit jackets to put it on. In reality, everyone shows up at work here in t-shirts and whatnot. So you know, reality and appearances can be very different, and you will see that's very much the case in cryptocurrency as well. Okay, so let's jump into the content. So in the first, so here's the agenda for today. So I'll first talk about you know, my personal background and how I ended up founding this company and what the company does, and briefly touch upon some of the key learnings I've gathered running my own firm that could be relevant for you folks. So basically, I asked myself, if I were a student at Galbis right now, what would be the useful thing I would tell the younger self, right? My younger self. So that's what. So that's some of the things that I've came up with, and then what I'll do is that I'll go over some of the what I call jargon busters. So in order to understand the market in cryptocurrency, it is very important. It is very important for you guys to understand some of the fundamental concepts. Since roughly three quarters of you guys cannot explain what a Bitcoin to your mom and dad, let's go over this thing so that we can cover the basis. Armed with that particular knowledge, then we're much better positioned to explain what are some of the market participants in cryptocurrency, how it has been developing in the past few years, and how does it compare to the traditional ones. So those are the three big chunk of things that we will be going through today. Yeah. So let's start with the introductory part on myself as well as the company. So as Vesa mentioned, I think I took this particular class roughly exactly 10 years ago, right? And then, so I graduated from Gaobis in 2006 with a master's degree in finance. And my first job after school is I went to work for a strategy consulting company called Boston Consulting Group. So that was a very good extension of my studies, so to speak, where I learned some of the basic, very basic things. It's a great place to work. So, but the downside of that particular experience was that you don't really get any sort of like a work-life balance, right? You spend hours every day doing analysis, fixing PowerPoint slides until 2 o'clock in the morning. So I did that for exactly 2 years. Then I went to work for Microsoft, not the Nokia side of folks, but the actual software people. And the reason I did that was because I've always wanted to know how the global tier 1 technology company functions. And in order to do that in Finland, there's very, very few opportunities, right? Because, you know, if you think about Google and Facebook doesn't even have an office here really. And the Google office here is nothing but a sales office, so you don't really get a lot of exposure. So Microsoft was one of the only places where you can get some deeper understanding of how, like, you know, basically some of the largest tech company on earth, how they operate. And it really has opened my eyes and changed my fundamental understanding of how technology works on a global scale. And then it is at that point, I founded my first company called EntoCube, which is a company that is still up and running and very different to what I'm doing right now. EntoCube is actually a company that essentially come up with technology to industrialize a human edible insects farming. So basically we grow crickets for human consumption as an alternative source of like sustainable protein production, right? So very different than cryptocurrencies. And then that company is still up and running. And then that's my first hand on entrepreneurship while I was working at Microsoft as essentially a side hustle, because at that point, I know that I'm not going to spend the rest of my life working for some companies. I always wanted to do something on my own, but it might be better to do it with other people's company or do it as a side hustle to do some risk minimization, which is what I did. So a lot of the lessons I've learned from EntoCube is something I directly apply to something that I've done in Tesseract. So roughly around that time was actually, so this is about 2016, 2017, somewhere there. And I was actually introduced to cryptocurrency as a concept when I was somewhere around 2015, right? And it's actually a funny story and how I come into contact with cryptocurrency as a concept and directly how that linked to the foundation of the company, which is that I was actually working at Microsoft at that time. And then there was a very senior security research person coming from Seattle to do something in Finland. I can't remember what he was doing. And then on his way home, he stopped by at the Finnish office and just basically give a small chat about what is it that he was doing. So at that point, he was monitoring financial transactions for a US intelligence agency, right? Because Microsoft hosts data for NSA, CIA, all of those people. So they actually run like a huge cybersecurity research center. So he's one of the senior research there. And then he just basically showed me all kind of like a weird illicit stuff that were happening on the dark net. And to my surprise, everything was denominated in this Bitcoin thing, right? So this was 2015. So this is before Bitcoin was a thing, really, right? Hasari haven't wrote an article about it yet anyway. So my immediate reaction was like, what the hell is this Bitcoin thing that I've never heard of? So I went home, started looking into it. And then as a person who grew up in mainland China, perhaps a place it doesn't have the greatest historical track record of respecting individual property ownership rights, right? I just immediately, at least ideologically, bought into the concept of cryptocurrency. Like, regardless of how volatile it is, regardless if it's a cash flow back in the value of whatever it is, as long as there's a common consensus among the market participants, this thing has some value. At worst, it's a censorship-resisting store of wealth that is valuable for the vast majority of the global population that lives at a place where the government may or may not respect your property ownership. Right. In Finland, this is not really all that relevant, so to speak, right? Because if the local tax office show up at your door and take your property away, probably you screwed up something. But in vast majority of the world where people live, you really don't have to do anything for the government to show up and take off your stuff away. So I was immediately kind of like bought into the idea of cryptocurrency. I would like to be involved in the growth of this industry. But then being a finance person, being a good student that have learned plenty from folks like Vesa, the first thing I did was I tried to apply some of the frameworks and models and whatever it is I learned from school for evaluating like what is the true value of this Bitcoin thing. Back then, I think like when I first started, Bitcoin was worth like $1 or something, right? So pretty much nothing. But even at that point, I couldn't figure out what is a fair value of cryptocurrency, and I never bought any, and I still haven't bought any today because I don't know what this thing is supposed to. I know this thing has value, but I don't know how much it's supposed to be worth. Therefore, if you don't know how much it's worth, don't buy any, which has turned out to be an intellectually very correct but financially disastrous of a decision, not looking back in 10 years. And then, Vesa, did you have a comment?
Yeah, I'm trying to raise my hand, kind of, as you can see, kind of, I can't do it, but so my kind of ask kind of this way live. So kind of now, as you mentioned, the guy from some intelligence agency kind of giving you the first kind of lecture or kind of about this topic. So the question that kind of the big question about the cryptocurrency is kind of the criticism is that kind of people say that, critics say that kind of Bitcoin is so popular because kind of as people do kind of the drug business kind of anonymously, but kind of at the same time, kind of the whole blockchain technology is kind of transparent and all transactions should be kind of traceable. So kind of so what is it really kind of something that kind of, is it really kind of a dark, as you said, kind of a dark pool or dark market kind of, or is it something, because on the other hand, kind of a colleague of mine have been talking to a guy from FBI in the US, and this guy had told that this Bitcoin is the best that they have kind of ever seen, because they can directly kind of trace all the drug money coming from kind of or going to Mexico. Yeah.
So a couple of comments here. So this is something that I'll cover in more depth in one of the later stages, but just to briefly answer your question here. So something being public, like being publicly verifiable, which what the cryptocurrency is, right? Meaning you can see that X amount of transaction happened between point A and point B, and it being anonymous, meaning that you don't know who point A is and you don't know who point B is. Those are completely not mutually exclusive. So this is what cryptocurrency is at the moment, mostly, with the exception of some like specific use cases, which is that you know that it's a bit like emails, right? It's a bit like in emails in the sense that imagine if you have a public email, you can see that a vessel send an email to Ichen, but then it's impossible to, well, it's very possible, but it's difficult theoretically to link vessel@gmail.com to Vesa Botonen as opposed to like a million other vessels out there, right? But in reality, with like the increase of like the forensic technology and a lot of the data analytics, you can more and more so link between the people and say a wallet address. So basically an email address. Now, what people are doing, right? Like, of course, this is one of those things where people can get around it, and there's like more regulation coming into place. When you kind of limit yourself only to the cryptocurrency space, there's many ways for you to basically disappear in that universe. But at some point, let's say if you have like $1 billion worth of Bitcoin, you're not gonna go buy something with $1 billion worth of Bitcoin, right? You have to convert that into dollars or convert that into something to buy something to essentially use that asset. When that happens, you essentially need to touch the traditional banking regulated world. And that's a place where the regulation and the government have a choke point. It's like, fine, you can have $1 billion worth of BTC floating around, but like basically let's just make sure there's no way you can spend it. Right. So a lot of those type of a question is what I struggled with back then, which is that, okay, there's a lot of like a pros and cons with the technology, and there's a lot of pros and cons in terms of application of this particular technology in the forms of cryptocurrency. And I couldn't really figure out what it is that the true value of it. So then what I did was that essentially what I did was, okay, I want to get involved in this, but I don't know how much it's worth. So I'm not going to buy any. So what the hell am I going to do? That was basically the conundrum I had in 2017, 2016-ish. So then I spent basically 6 months looking for a way to get exposure to the industry without buying it on the line. And then what I ended up doing is essentially the credit side of cryptocurrency, which is something that essentially forms the backbone of the Tesseract as a company. So Samsa had a question here. Are mixers still a thing as covering the tracks of crypto transaction? The answer is absolutely yes. And for those of you who don't know what a mixer is basically a giant pool of cryptocurrency where everybody deposit money into that giant pool. And once you go into that giant pool, when it comes out, it's impossible to match the income and the outflow. So that's essentially called a mixer. And that's basically a money laundering thing that people would use with shell companies in Bahamas and whatnot. So this mixer thing is still very prevalent in crypto. That is true. However, the problem with this thing is that you can cover the tracks in crypto however you want, but in order to cash out at some point, you still have to go through an off-ramp, on-ramp, and that's where the regulatory KYC, AML stuff goes. Yeah? Okay. Now, moving forward, as I said, yeah, anyway, so back to the funding story. So basically the company...
Eugen, yeah. There's a question, can you see the chat?
Yeah, I can see the chat. So Mateo says, so use mixers, make the transactions small enough, push them in sequence and distribute them around several sources. The last three being the same as a traditional money laundering. Yes. I would say that is a gross simplification of what traditional money laundering is. I think you're giving way too little credits to the people who launder money. It's a lot more complicated than what this is. There's layering, financial engineering, And there's a very, very, very thin line nowadays when if you look at what the billionaires are, look at a lot of the what is happening here between tax planning and money laundering. The lines are really, really, really thin. This is a hugely complicated thing. But yeah, on a principle level, yes, the mixers are not necessarily about pushing things in sequence and distribute them through several sources, but really that obstruct, like putting things into a common pool to obstruct the input and output. That's actually the key point. Yeah. So
may I kind of as kind of a, to me, it looks that the feeling I get from Mateu's kind of a response to Samsa's question is that you know pretty much about this market. So kind of a, it gets pretty technical. So let's not go too far on that path. I'm losing my track.
No, but excellent question. Excellent question. Yeah. So
yeah, sure.
So basically, what happens? What happened with this is that so essentially, I landed on the credit side of things, and I essentially started doing algorithmic lending myself by just pulling some code from GitHub and shove it into a server and stick it in my mom's basement. And then that thing ran for 6 months. Forgot about it. And my mom, at some point, I was like, what the hell is this giant box that's been humming in my basement for like half a year? So I went there, had a look at the returns, which was way too high than compared to what I've anticipated. I didn't understand that. So because I was intellectually curious, I liked this space. So then what I did was I just basically cold emailed a bunch of like CEOs in financial markets here in Helsinki, asking them, it's like, hey, you guys do finance for a living. This is something that I do not understand. Maybe you know something I don't know. So that conversation went back and forth. That eventually led to some of the feedback session. Ended up with those CEOs essentially saying like, hey, you seem to be onto something here. Here's some like money. Why don't you go take a run at it, see how far you can go. So that's essentially how I ended up with the company itself. And it hasn't really been a straight line so far. The first product that we essentially launched in Q4 2017 is essentially packaging some of the borrowing and lending we were doing into a retail-facing product in the form of a cryptocurrency savings account. So let's say if you have a Bitcoin, Ethereum, whatever it is, give it to us. We will essentially deploy that in the same way that I deployed it in my mom's basement, earn a return, give it back to you, give it back to the retail customer as a product, as a savings account. So that didn't really work because, well, I have no idea what I was doing. So that's probably the reason why it didn't work. But that's perfectly fine. And then, so then we basically chopped that product after a whole year of work, learned like shit ton of stuff, and then went to the Finnish FCA, get ourselves regulated, which is a huge undertaking. Then essentially pivoted ourselves into a purely institutional-facing business, and that's what actually essentially helped the business taking off. As of today, in Q2, we raised 25 million as a Series A. And I didn't know this until Talos Elämä wrote about it, that it turned out to be that we were the largest A round that Finland has ever seen, which I don't know if it's a good thing or a bad thing, but at least it makes a good headline on newspapers. I'm pretty happy about that. And the thing is that the company has been growing tremendously fast in such a manner that when I started the fundraising about a year ago, we were roughly 4 or 5 people. So that's on the backbone of that, we raised 25 million. And then as of today, we have roughly 35 people at the moment. And we've done around like almost $1 billion worth of loan origination with a book about 150 to 200 million dollars, depending on what the Bitcoin price is today. So it goes up and down a bit in dollar terms. But it really hasn't been a straight line. There's a lot of struggles and whatnot in this particular segment. But the good thing that I would like to highlight here is that it actually all boils down to the team. It's at the end of the day, it doesn't really matter what you do. It's all about the people that you end up work with. And this is essentially my management team at the moment, and those are the type of people we have at our firm. So when I was thinking back about my experiences in Galpis, right? So I remember when I took Vesa's classes, what I did was I basically always did a group work with a small clique of people that I knew very well. So I was essentially optimizing for how do I get the best grade with the most competent people that I know in my circle to make things as smooth as possible. But like later in life, I spent the first 10 years working in different companies, right? And then you just ended up understanding that most of the time you don't have the luxury to work with people that you know, let alone get along. So a lot of times you're going to end up working with people not only you don't know, you may or may not even like them. So I think for optimized learning, if I were to do it again, I would want Vesa to essentially randomize the group work setup. So I would end up with like really weird people that I would never end up doing group work with, because once you get to reality, that's actually how it works. You're gonna end up working with a lot of people you will never come across, and that's actually the difficult piece of real life work. Like I happen to have a bit of luxury being the founder CEO of the firm, so at least I can kind of choose who I work with. But 99% of the people in professional life do not have the luxury, right? The people that is reporting to me, they don't have a luxury to choose who they work with, because I basically pick what's on the team. So that is like a super important thing. If I were to do it again, I would in school I will emphasize that quite a lot more. So what is it that we're actually doing, right? So
kind of that's a very kind of valuable kind of a message to everybody, kind of a just kind of a for the sake of convenience and kind of the easiness kind of on this course, for example. So I didn't kind of force students to go into specific groups, kind of, but let everyone kind of join. But there are pros and cons. On the kind of learning kind of wise, it would be better
if for sure
students were forced to kind of do cooperation with the people that they had never met. That is something that you will learn, as that is your key point, kind of once you kind of join the working life. The only way to prevent that is to start your own company and choose your
once you make the top of the food chain, then you can.
Oh yeah, sure, exactly. There was a question about as kind of about the regulation, as kind of you said that you get kind of a license from the Finnish Financial Supervision. Kind of what is your takeaway from that question? Is that kind of as governments can't control the internet, but they can control all these crypto platforms, and kind of what is your current feeling about the regulation overall and say Finnish Financial Supervision kind of specifically, because you are a pretty difficult kind of animal for them to handle. So
I think about this. Like always, I remember like Gallo-Harjo taught that corporate finance class, and like the most important lesson I learned from that is the concept of the agency issue. Like people are driven by incentives that is relevant for them. So think about this from the regulator's perspective, right? What does regulator want to do? Regulator want to make sure there's never a problem. Like the best thing the regulator can face is that you never hear any news about anything ever. Like that's the best thing possible. So any changes, it's something that if they have a choice, they much rather there's nothing ever changes anywhere. Everything stay exactly where it is, right? So I think if the regulator have a choice, they much rather this whole crypto thing don't exist, so they don't have to deal with it. Because it causes a lot of problem. And as Samsa pointed out in the chat, you're very correct. Like the way they control things, because once things are in crypto, it's impossible to control them because of the anonymous nature of things. So the one thing they can control is the off-ramp, on-ramp, right? So meaning that converting crypto to normal money and vice versa. This is the part where they can basically choke. And this is like where the regulatory focuses are going to. Now, I'll cover this a little bit more later in this piece. But going back to what the company was doing. So So what Tesseract does is like, there's a lot of complexities you can add into this particular thing that we're doing. Like we're dealing with some of the most complex like derivative structures like the humans have ever seen. But the most basic form is this. Say, Vesa, if you own, say, a building in Helsinki, right? Let's say the building is worth exactly 100 million. You can take that piece of paper that says Vesa owns this building into Osuuspankki or JP Morgan or whatever. And basically it says, dear Mr. JP Morgan, I own this building. Can you give me a loan of $10 million against it of some form, right? Because you want to continue receiving the rent, but you want some liquidity, but you don't want to sell it. So in the most simple form, right? Essentially a collateralized loan. Now the problem with cryptocurrency is that there's $1 trillion worth of this thing floating out there. It is undisputable at this point in time that this thing has value, right? But you can't take like $1 billion worth of Bitcoin to JP Morgan and say, dear Mr. JP Morgan, can I have like $100 loan against this thing? JP Morgan would just like laugh you out of their office because one, they don't know what this is. Two, they don't know how to evaluate this thing. Three, they can't run the risks. So this is the type of thing that we essentially fulfill in the market, is to essentially be able to handle cryptocurrency in one leg of the trade in a credit transaction, either as a collateral or as the denomination of the loan itself. So the way to think about it is that it's basically a mortgage, except for instead of a house, which is difficult to liquidate when you have enough of them, you will have a cryptocurrency. And like if we learn anything from 2008, it's all about the liquidity, right? If the housing price start going down, your biggest problem as the one who hold the collateral is that would you be able to sell the collateral, i.e. the houses, in a quick enough manner without suffering too much losses? If you have 1,000 apartments in Berlin, it'll be difficult for you to sell it in one go. But luckily for cryptocurrency, for Bitcoin, for example, every day some of our partners trades like $20 billion worth of those. So liquidating $100 million block will be a drop in the bucket. And this is like the fundamental underpinning of what this company is doing. And I guess, Vesa, have you guys covered shadow banking and whatnot? Has that topic been covered?
We have, yes.
Yeah. So I don't like the word shadow banking because it sounds somehow shady. But shadow banking is actually a lot bigger than banking because it's basically somebody need to provide some financing for the segment of the economy for whatever reason the bank don't want to touch, right? Too small, too risky, but that's perfectly fine. So we're essentially part of that alternative lending space in which we provide credits to places where the traditional financial institution hasn't caught up yet. As far as I know, a lot of the larger financial institutions, especially the bulge bracket, I'm sure some of you guys are trying to get an internship at soon. They start to do this thing with us now. So the larger financial institutions actually come into this, but then of course they don't tell normal people about it, right? Because it's not relevant. So essentially what we actually want to do as a company is just acting as a bridge between all of those players, some of which I will cover later. And then the bridge that we're trying to build basically covers both between the fiat, i.e. the normal money, and then cryptocurrencies on one side, and a centralized finance, i.e. a non-protocol based activity versus DeFi, so decentralized finance. So what the company is doing is essentially it's sitting at the crossroad of those two axioms and try to connect everybody together through the activity of credit flow. So some of those logos you see here are our customer partners, whatever you want to call them. Yeah. So, and then a quick word about the fundraising, because I feel like some of you guys might end up doing this at some point later in your life. So just to give you a quick taste of what this is about. So this is a process we run. It's kind of like a sales funnel, right? You start with X amount of outreach to intro meeting, then there's a data room, and then there's a second meeting, further Q&A, there's more meetings, until a term sheet shows up, you sign the paper, and then lawyer do their work, then you get to go forward there. At the end of the day, it's a little bit of a numbers game. And then I had a guy who used to work for. I had a guy called Tommy, which you can see here. He actually went to golf biz with me, and he went to work for Goldman for a few years. So he did a lot of fundraising processes there. So this is basically something he helped me with. And then essentially we solicited a whole bunch of targets, did the outreach there, had a funnel, had a plan, wave 1, wave 2, wave 3, wave 4, push everything through, essentially landed it with a term sheet and a bunch of investors. So what I would like to highlight from this process is that it's really not, it's a huge endeavor. So I counted in the span of 2 months, I had 240 meetings, Zoom meetings, which is actually a very good thing. Because of COVID, I did all of those things essentially over Zoom because nobody was traveling. But back in the days, for example, when Mickey from Vault did his like run, what he had to do is that he had to actually hop on a plane to fly to London, to San Francisco, back and forth. And that is just tedious if you want to have 240 meetings. COVID, which basically made that a lot easier. I basically sat somewhere, I had 200 meetings in 2 months, which is already tough enough mentally because different people are in different time zone, right? So you start the day with Asia, and then you spend the whole day talking to the European folks. When all of your friends go home from work, America just wake up, then you continue. So basically, like all of those logos that you see are just like my life for 2 months, just continue wanting over and over because everybody always want more information, more data. So it was a non-trivial process. And next time, like it also taught me to have more appreciation when I see a news title somewhere, some company raised some money. This is actually like shit ton of work. It's like insane amount of work here.
Yuchen, may I ask that looking at the names on
this,
as you said, you had meetings with 200. Just looking at these T1 consortiums, they are the equity partner ventures, Axel, Tiger Global, Coinbase, there is the crypto marketplace, Coinbase Ventures, these are the leading, these are the big guys. They are biggest guys, you can think of. They are managing each of them easily billions.
Yep.
So how? But from the Finnish office, how many were you at that point? How was it possible that you got the contact?
Yeah. So that's so we had an extremely not normal process in a sense that a couple of things worked in our favor, which is that unlike most of the fundraising startups, we were cash flow positive, we were profitable, right? So basically our story was that we don't really need to raise financing. We raise financing because we need some of those funds and folks to help us to go through a lot of the doors that I couldn't get through. So it's very much not about money. At least the story was that it was very much not about the money, right? It doesn't hurt to have a war chest if you're going to pick up a fight with someone later, but it was really not about that. And at that point, it was also one of those pivotal points because some of the larger financial institutions start to come into cryptocurrency. So a lot of those larger funds start to look into cryptocurrency as a space seriously. So that was about 18 months ago. So they're ready to deploy capital in a serious manner. And then because we were such a tiny team, we bootstrapped all of this time, pretty much most of it. And we were profitable with like a very good revenue number with 4 people. You basically just, like, what we actually did was that we just like wrote a whole bunch of LinkedIn messages and says like, hey, you've never heard of me, but like, here are the numbers. Just like show them the numbers, right? Vast majority of the company trying to do like a Series A you typically don't have this kind of performances to send a message, more or less, at least you will get a meeting, because like, in a way, our CV was good enough. But once you get to the first meeting, it's like going to a job interview, right? After the first job interview, your CV become pointless. But if you have a good enough CV, it'll pretty much guarantee you to get to the job interview. So, and then some of those larger ones like Excel, DST, Coinbase Venture. So Coinbase Venture was just literally me writing a message on on LinkedIn, and just like, hey, it's me. Would you like to have a chat? Whereas DST, those are type of funds that they don't answer LinkedIn messages. So then we need to ask for, say, a common fellow founder or other investor. I think people like Mickey and whatnot made some introductions for me. So and also my network that I built during my GalpBiz years turned out to be super useful, because guess what most of my finance classmates ended up doing? Vast majority of them ended up in like private equity something. Right. So most of them did like, MBB or investment banking like myself. And I think I'm actually the only person out of my class who ended up being an entrepreneur. Everyone else is at some hedge fund, at some bank, at some private equity fund. And then that community, through one way or another, can somehow link to some of those larger guys. Maybe not a senior partner, but it can get me to somebody, a junior, and with our CV, then we can get to the next step. So, and this is something actually was a little bit to my surprise, which is that people often say that, if you go to Harvard or somewhere, like the network is the most important thing you actually get out of that educational thing. I just somehow expected, okay, GalpBiz is not exactly Harvard, so maybe the network isn't that important. But it turned out to be, it was super important. I think like 1/3, half of the meetings that I managed to get, some in one way or another went through one of my contacts at GalpBiz. So that turned out to be a really useful thing, which is another reason why I would encourage all of you guys to work with people beyond your immediate social groups, because that network you build with seemingly really random people, trust me, it'll be super useful somewhere down the road. Like, I guarantee you that. Okay, so enough about us. So let's get to the crypto part. So for those of you who are not familiar with blockchain, I'll just spend 30 seconds on this so we can move on. So there's a lot of technical jargon, fancy stuff that's been flying around regarding all of this thing. The only thing you actually need to know about blockchain is that it's basically a database, right? So basically, well, database is just like a complicated version of Excel sheet, really. A database that is distributed, so you have multiple copies of it at the same time. So at any given point in time, between those different copies of those databases, it can sync to each other to make sure there's only one source of truth. And because of this specific nature of it, it's typically a lot slower than a centralized database, because you have like a whole bunch of places you have to sync between different things, right? But it's very, very tamper-proof, because there's different copies of it, and all of them has to be the same. And then it's also very, obviously very decentralized. So you don't have one party who can basically make up things or change things or shut the whole thing down. So, and because of the blockchain nature of things, the data are very immutable, means like you can't really change anything or go backwards. It's transparent, as in publicly you can see how different transactions move from point A to point B, but it's anonymous because you don't know who point A and point B is. Everything's obviously encrypted. There's a concept of one-way hash function, which I will introduce to you, and then lastly is distributed, so that you, like, if you take down one copy of the database, it still continue rolling. And this is important innovation, but it's not suitable for everything in the world. So, for example, I personally do not believe, and it is the firm's conversation. It is the firm's belief. Tesseract companies believe as well that we will not end up in a situation where, for example, a cryptocurrency will take over the existing financial system. I don't believe that at all, because I feel like there's like cryptocurrency as a financial system is good for certain applications. The traditional centralized banking type of financial institutions is good for something else. So the future will be a hybrid world between different places rather than like a winner takes all type of a thing. I just simply don't believe that. Okay, so proof of work and proof of stake consensus mechanism, which is just a fancy way to basically saying, if you have a different version of, if you essentially have a different version of the database, how do you ensure that all those different copies are synced at the same time? There's basically two main ways. One is called proof of work, and the other one is called proof of stake, which is becoming more and more popular. And this is a part where you need to pay a little bit more attention, because this conversation between those two, which is actually the thing that underpinning all of the stuff that you see about how wasteful the energy stuff is related to Bitcoin. All of this actually boils down to this conversation that I'm going to have now. Yeah. So here's the thing. And the best side, like I will go into 30 seconds into a small technical detail because it's relevant here. So there's a concept called one-way hash function. Okay. This one-way hash function thing is basically the thing that underpins all of the passwords cryptography that you see anywhere between the banks to your Gmail to everything. The basic mechanism of one-way hash function is basically underpinned by a simple mathematical concept, which is basically a prime number, right? So I'll give you an example. So if I give you a really long number, multiplied by another really long long number, it'll be very easy for you to check if the results of those two, this mathematical operation is correct if I give you the results. But so think about it as is that if I tell you 2 times 3 is equal to 6, if you have a computer, it's very easy for you to check if 2 times 3 equal to 6. But if I give you the number 6 and ask you, what are the multiplications that will get you there? It's really, really difficult to go the other way around, right? I'm giving you a very simple example, but if you imagine instead of 2, you have a number that's like 100 digits long. By that point, all the computational, because to go the other way, the only way to do it is to try 1 by 1. Okay, does 1 times 1 equal to 6? No. Next, 1 times 2. So this dumb operation is essentially underpins the proof of work so that each one of the cryptocurrency miners can verify if the calculations and the validity of each one of the transactions in each one of the blocks. And if you hit one of the blocks, you get rewarded by cryptocurrency. And that's the reason why you have, this is the why, like here, I have those statements here that in proof of work, essentially you have a whole bunch of transactions that say somebody wants to put it on the blockchain. And then what a miner then does is that it basically verifies whether or not those transactions are legitimate or not, essentially through this one-way hash function thing that I just mentioned. Like, it's much more complicated than that, but essentially it's a really dumb way to solve a mathematical problem that is a little bit similar to using brute force to guess a password, basically, right? So it's wasteful, but it's an indisputable way to essentially check if the transactions are correct. So miners are basically the people who exchange electricity and computational power to secure a network. Now, the discussion that people often have is that is very wasteful. Well, that's actually kind of true. It is kind of wasteful, but the way I think about it is that, okay, so on one hand, you have shit ton of electricity that's being used by data centers to do this thing. But what is the benefit of this thing? But the benefit of this thing is that it's actually the current best alternative to a centralized financial system that is censorship resisting. So nobody can take this thing down, basically. Now, it's very debatable, at least to me, whether this is something humanity as a whole should do or not. But I think we should also not simply look at the energy consumption and judge it based on that, but also think about what is it that we're getting back in return, right? So the alternative of this thing is something called a proof of stake. The proof of stake is basically the easiest way to think about it is to essentially it's like a voting system based on how many shares that you have in that network, right? So Ethereum is moving towards proof of stake by basically saying you have different nodes, right, equivalent to a miner, basically, and then those nodes will hold X amount of tokens, so Ethereum in this case, and then the node will then vote to validate a transaction or invalidate a transaction. If you vote for the wrong one, you risk losing part of your staked tokens, basically. So essentially creating an incentive to make sure that everybody votes always for the correct one, because if you try to do anything malicious, it'll just basically cost you a shit ton of money, which nobody wants to do, right? So this is a consensus mechanism that you have there. And then the next important thing is the major type of cryptocurrencies, right? So the simplest one is that you have a stable coin, right? So USDC, for example, is one example, which is essentially a digital dollar issued by Coinbase. And how it works is that Coinbase has a bank account at JP Morgan. You send $1 million to JP Morgan to the Coinbase account, and then Coinbase will then issue you $1 million equivalent of virtual stablecoin tokens on the Ethereum blockchain. And now you suddenly have that $1 million USDC, which is backed by the $1 million in JP Morgan's bank account. And then the second type is that it's just basically a security, also known as type of like a utility token, right? Bitcoin, Ethereum, those are currently regulated as this, which is that it's not really a shareholding. It has some functionality, i.e. utility, but it's treated more and more like a security by a lot of the regulator. And then lastly, it's just basically you have some protocol tokens like Aave, for example. That's just basically a share certificate of the protocol, right? As a token holder, you're entitled to part of the cash flow generated by the protocol. So that's basically the same thing as an equity share, nothing really more than that. And then what I want to highlight here is that I forwarded you some materials beforehand to read regarding DeFi from economists. I'm not sure how many people actually gone through this. So DeFi, decentralized finance, has been a really hot topic. The key thing to remember here is that in a traditional financial sector, you always need some a third-party trusted middleman to facilitate some transaction, right? So, for example, when I go to like Alibaba to buy a burrito, not a burrito, a bottle of Coca-Cola, when I swipe that credit card, what happens at the back is that the credit card company, like the terminal, is basically take that credit card and then they go to the bank, and then they go to the bank and ask, like, does Yicheng have €2.50 to buy this Coke? Yes. Come back, write it down in essentially the database, i.e. the ledger, and the transaction goes through. So you need credit card company and all of those to basically in the middle to ensure that indeed this account is valid, this transaction has enough money, etc., etc. Right? Whereas in the decentralized finance world, all of the activity that is conducted by the aforementioned participants are actually done by the blockchain itself on the software layer, which has a benefit of essentially making anything cross-border a lot easier, right? For example, when I send money to someone in Philippines through the normal banking system, it actually goes through 3, 4, 5, 6 different banks, whereas which is one, very time-consuming, two, wasteful, and then just very, very old school. Whereas with the help of blockchain, you can actually do it without any centralized party whatsoever. The software layer built on the blockchain protocol will facilitate this kind of transactions without anybody wasting any time and energy or anything, which I think in long run, in the truly globalized economy that we all operate in, will become more and more useful. This is not to be kind of confused with some concept, like for example, Facebook is launching a token, or Visa processing global transactions, because those are still a third party that essentially the government can shut down if they feel like it. Whereas in this particular case, due to the decentralized nature of the protocol, it's something not possible. And DeFi is one of those things that essentially is kind of like the open source innovation that the internet has seen in the past 30 years, which is that anybody with any ideas can go out there and just invent stuff, which is a great thing because it facilitated a lot of innovation. But it's a bad thing because, well, there's no barrier of entry, so anybody can do this, which means a lot of scam, a lot of shenanigans, a lot of things that are unregulated. Here, I think like it's a snapshot of some of the companies and participating in the recent industry report, and this is one of those things that we have a team who basically spend all day every day just try to follow what the hell is going on in the DeFi world. Okay, so some market participant. So this, by the way,
yeah. Previous the graph kind of tens of different companies. So am I right in assuming that all these companies have been founded in less than 10 years ago?
Yeah, more like three.
Three, yeah.
More like three. And
talking about the how rapid this development here is kind of, it's in the financial sector, I have never seen anything like this kind of happening.
Yeah, this is basically what happens when you open up the entire system for anybody to build anything, and essentially the market will decide does this make sense or not, which may or may not be a good thing, right? Because like people don't always know what's best, and then there's a lot of deception, scam type of thing going on. But they are like insane amount of innovation that are just traditionally not possible. Right. Oh yeah, by the way, for those of you who don't know, this is what a cryptocurrency mining facility look like. I don't know what's up with the green light. There's no reason for that, but it's basically the same thing as a data center you will see Google has. Just a bunch of machines doing like mathematical problems, basically. So this is the equivalent of the settlement and clearing layer in the traditional financial market. Vesa, did you guys go through settlement and clearing? Like, for example, like
no, we haven't.
Okay. So in the traditional market, when you have like a trading, so settlement and clearing layer are basically it's like a mutually owned infrastructure by all the market participants, so all the banks and whatnot, who essentially pony up their balance sheet and basically says, whenever you have a derivative trade or whatever things moving forward, everybody do all the trades throughout the day. At the end of the day, the settlement and clearing layer look at all the transactions from everybody, net everything out, and then move the title of the residual, right? So the way to do this is that, let's say I'm a bank, Vesa is a bank. In the traditional sector, throughout the day, I send $1,000 to him, and then Vesa sent $500 to me. At the end of the day, the settlement layer will basically say, okay, I see $1,000 going that way, $500 goes that way, net it out to exactly $500 from each end to Vesa, and that's it. That's what the settlement layer does. And it's really, really useful of a thing, because all the financial transactions that you're doing, the credit risk you're taking is actually from the settlement layer, right? And you don't really have that in crypto. And that's where the miner does, because a miner basically makes sure all the transactions are proper. Transactions are properly settled. So you only have one source of truth that going, say, for example, a transaction from point A to point B. The second most important thing in crypto market is all the exchanges and OTC desks, meaning over-the-counter desks, right? So exchanges are the places where people meet. Essentially a buyer seller. The digital market, a digital version of a Sunday, like a market essentially, right? And the cryptocurrency exchanges are very, very important here, because in the traditional market, the exchanges are only, they're basically a front end for people to have interaction with others. All the settlements, all the custodianship, a lot of the work that you do are delegated to specialized players in the traditional financial market. Whereas the exchanges in cryptocurrency, they're more like a one-stop shop for almost anything you can think of. Because if you trade at a cryptocurrency exchange like Coinbase, your money actually sit with Coinbase, and then Coinbase actually settle all the stuff for you. So it's like an exchange plus a custodian plus a settlement layer plus all sorts of other value-adding services they may or may not have. So it's the specialization of the division of labor is much less in cryptocurrency. Let alone nowadays there's like the decentralized version of this, where you basically trade peer-to-peer through a protocol without going through any centralized party like Coinbase. And then custodians. This is probably, Vesa, I hope you can agree with me. Custodians in the traditional financial market are probably one of the least sexy business you can find, right? This is one of those places where nobody really cares about, because essentially in a traditional market, it's just like a kind of like a back office paper pushing type of a thing.
Nobody cares as long as everything goes as planned. When something goes wrong, everybody's excited about that kind of.
True. It's the unsung hero of traditional financial market. Yeah. But the thing is that it's a very thin margin business in the traditional financial market that you don't really hear about unless something goes wrong. But in cryptocurrency, it's very different, because cryptocurrency is basically a bunch of email inboxes where you have money inside of it, and if you lose a password, you're screwed, because you'll never get the money out of your wallet, i.e. the inboxes, right? So the custodians in cryptocurrency are basically really fancy way of essentially managing your passwords and permissions to essentially email inbox type of place, i.e. your wallet. So those people, especially when larger institutions are coming into place, whoever that takes a custody of the asset actually matters a lot. And that's why this matters. And this is why the custodian is a very important thing here. And to close things out, just to think about how crypto versus the regular financial market, the thing is that the industry is still very new. The whole thing is less than 10 years old. And institutions are really coming into this space in the past 12 months, but like it's still really new of a thing, which means that industry maturity is very low. The regulator is trying to play catch up as much as possible. A lot of times when we talk to regulators, they don't know what they're supposed to do. So we have to tell them what we think is the thing that we think they should do to us, which is a bit of a weird thing. But I guess in the traditional market, it's not that much different either. However, what that actually means is that there's ample amount of opportunities in this space as well. One of the most exciting things why I ended up doing this thing, as well as a lot of the golfist people that I went to school with and are currently studying or working at our firm, is that this is probably once in a generation opportunity in which you have like almost free hand to introduce as much new things into the market as possible. Right, because the barrier of entry is lower now, and you have this new paradigm that will facilitate a lot about the decentralized Web3 type of activities, which previously was just simply not possible. I can't remember the last time you had an innovation like this. Like it basically let you invent new things, and that doesn't really happen in finance because it's so tightly gripped and it's such an important piece that you most of the time when you want to do something you can't. Like try to do that at a bank. Good luck with that. It'll never happen. Whereas here, it's like it's anyone's game that you can just like invent new things. And if it's a crappy idea, the world will tell you because it won't work. And that kind of like a rapid, almost like an internet age type of approach to taking a internet company approach to finance is something that is truly unique and exciting, at least to me. So you see a lot of volatility, very little regulation, and ridiculous amount of growth, which in a way is an opportunity. But let's see how it goes. At least that's one of the reasons that got me up from bed every day to go to work. Is that regardless of how it is, it's never a boring day at work. This is one of the things that are moving so fast. Every 6 months, the entire industry reshuffles, and if you're not dynamic, if you're not like innovative, you're just gonna die. So that's at least something that I would highly recommend all of your folks, all of you guys, if you haven't looked into this particular industry, look into it a little bit more, because if nothing else, at least it's intellectually fascinating to someone like me. Okay, cool. I think that's pretty much all the content I have here. Vesa, how are we doing on time?
We're doing very well, kind of just kind of as in these old worlds, kind of a metrics, just one kind of measure that shows the significance of this new market is that the Coinbase that you mentioned, which had an IPO last year. It's so
they're doing now,
which is interesting per se. Its market cap is 45 billion, while Nasdaq, which is the stock exchange that we all know had been operating for years, that is kind of cited every day, kind of all the financial news. Its market cap, the exchange, is 30 billion. So it is. Had somebody told me this kind of, and Coinbase was founded just 10 years ago. So kind of it is unheard of, you could say.
But so, like, yes, I hear this often, but did you know that the $40 billion market cap in its latest quarterly report is roughly 3x the annual revenue that is growing at 50% a year. If you look at that ratio, it's very reasonable, right? Like, it's almost like a value stock that will get Warren Buffett excited. If you just look at the numbers, it's 3x revenue. Like, which other company, because I bet if you look at the multiples, you wouldn't see the same number at Nasdaq. And you wouldn't see the type of a growth stock. So I think a lot of times it's about okay, whether or not that's sustainable in long run for Coinbase, okay, another topic. But given the current numbers, it's not that crazy, right? I don't know what the market cap is today. I heard it's not haven't been doing that well from some of my friends who work there. But I anyway. Yeah.
It remains to be seen. So there are a few questions. First, the question was that do you think that the cryptocurrencies will kind of replace the fiat currencies? What is your
No, I don't think replacing, like I mentioned earlier, I believe in a hybrid world. There's a reason, like if you look at the kind of the classic theory of currencies, it at least indicates academically so that there should be more than one currency in the world, right? Which means for various reasons. So what I do believe is that the fiat currency is good for something, the cryptocurrency is good for another process. Like, for example, I don't see any reason why cross-border payment should be done in anything else other than some sort of a digital currency of some sort. I don't care if it's Bitcoin or digital dollars or whatever. Like the settlements and everything, it's just much more secure, much faster. I don't see why we shouldn't do that. Whereas on a day-to-day basis, I'm not sure if it's so important. I don't think it's a good idea for us to go to Stockman to buy something with an asset that is so volatile like BTC, right? So there's like a different places where different things should be used. I don't think replacement is the word. I think coexisting is probably what we're looking at. Okay, next question from Berto. how big of a problem do you see the age of the technology behind Bitcoin as for its future application? Yeah, so I don't think the age is what relevant here. And future applications is a very big concept, right? I think Bitcoin going forward will basically become like a blue chip digital gold type of thing. Bitcoin is not really designed for anybody to build stuff on top of it the same way that Ethereum is. So I don't think it's good for that anyway. Whereas things like Solana and Ethereum are much better to exist as a technology layer where other folks can build other applications on top. So yeah, I mean, like it's a bit like asking, like, what do you think about the construction of a skateboard if you want to go 300 miles an hour? Well, the skateboard wasn't really designed for that. A skateboard is a way. Skateboard has its function in the world to get you from point A to point B. But if you want to go for like 300 miles an hour, probably your rocket ship is more suitable. So like it's a different type of a setup. Then Mateos have a very long one.
But he mentions that don't answer. It's kind of a
okay.
It's fascinating kind of a kind of personal kind of story that he refers to. But then Samsa has kind of a if you had to decide what implementation of cryptos will bring the largest change in long term.
Once again, I think the important thing that we need to remember about this whole crypto thing is that, like, crypto is just a application of blockchain technology. Crypto is just basically a token. What the hell is a token? Token is basically one line on a database that is recorded on a blockchain. So the question is more like, do you see a decentralized, immutable database to be useful for life? Yes, absolutely so. And then there are a lot of innovation that happens beyond all. Like, we often talk about finance when we talk about cryptocurrency, but you can do a lot of stuff that is not finance related, right? So the latest fad in this whole thing is the NFT, so non-fungible token. So it's basically kind of a smart contract where if I have a digital piece of art, let it be music or whatever, I can distribute it on the internet. Whereas a smart contract, whenever one ownership of the thing changes hands, the original artist will get a piece of the cut of the transaction. And that goes a lot beyond, the traditional finance activity that people will think of when it comes to this sort of a thing. So I think it goes a lot, like the programmability and the decentralization nature of crypto, I think will bring the largest changes in the long run.
Related, as you mentioned, NFTs, there's a last question is that, what is your opinion on NFT? Do you think Tesseract could act? Well, yeah. Related to this, but there was a news kind of 2 weeks ago that crypto lender Genesis accepts NFTs as. What is your takeaway?
The funny thing, so there's a couple of things I mentioned here. So Bitfinex is a partner of ours. Genesis is also a partner of ours. So NFT as a collateral at some point, we actually looked into this quite a lot. And the conclusion was basically that it's not a really good idea because there's so much shenanigans going at NFT market now. This is what happens when you have extreme illiquid assets, right? So let's say, Vesa, you own a piece of Picasso and you want to use that as a collateral to borrow some money. As me, unless I have a huge portfolio of different art pieces, it doesn't make sense for me to do an individual deal with you unless I have a lot of other art pieces in my portfolio in which I can diversify the risk, right? Because like for a Picasso, the liquidity is basically zero at any given point in time. So if you take NFT, which is basically kind of a digital art ownership type of a thing, loosely understood as a collateral, how do I run the liquidity risk unless I have like 1 million of those? So we are, for example, in discussion with some large counterparty that issues a lot of NFTs, right? Like Axie Infinity is one of those examples. If you have 1 million of something, you can do portfolio level risk diversification. But if you just have one or two, it just doesn't make any sense.
Good. Then the question that kind of we read every now and then, kind of from Sami, kind of the hack kind of there are frauds on this kind of so the crypto kind of the cybersecurity side kind of it's almost on a weekly basis that we hear or we read from the financial news that kind of a massive frauds, or US has seized cryptocurrencies from Bitfinex. Is that an exchange or?
Yeah, Bitfinex used to be the largest exchanges, and it's actually the place where I did my the basement thing that I did. Where I actually did it on Bitfinex,
okay.
And it was one of the only exchanges on the planet. Now there's like Bitcoin, they're just one of them. Yeah. So in terms of cybersecurity, so when you read about hacking in cryptocurrency, just remember something. Like, for example, when it comes to Bitcoin and Ethereum, nobody has ever actually hacked the underlying technological protocol in the same way that nobody has hacked Gmail or Google, but plenty of people have lost their passwords, right? So when you read about this Bitfinex hack, it's not like Bitcoin got hacked. It's that Bitfinex didn't run its password security for their wallet well enough that, back in the days, it was just in Bitfinex case, it was just an internal malicious actor that had way too much access to things when the person shouldn't, and just like disappear with the money. And then at the point of disappearing, that cryptocurrency was worth like 15, 20 million, which is still like a lot of money, but now it's worth like 4 billion. Right. So a lot of things has changed since 2016 when this happened. In terms of cybersecurity, I think that's where a lot of the custodian discussion comes into play.
Yeah.
Custodians are the people who kind of professionalize that piece, that you can't really have those kind of a thing happen anymore. If you let a bunch of people run their own password, they will either lose it, forget it, give it to someone else, being phished, being hacked, whatever it is, right? But if you let Microsoft, your IT department, run it like a professional organization, it's much less likely for anything to happen.
Maybe kind of the last question from Samsa, which is somewhat kind of lengthy, but kind of
This is a very specific and awfully particular setup. Samsa, I hope you're not talking about yourself here. But let's see. Yeah. So there's a couple of things here. What you actually highlighted is it's actually a much bigger question, right? The other way to ask this question is that would crypto and DeFi offer alternative source of financing for those who are in a situation where they couldn't get financing elsewhere, right? It could be a person buying a house like this. It could be a small, let's say you're a small entrepreneur for whatever reason, right? And you want to borrow 50,000 euros for whatever reason. You can't really go to Oslos Bank and ask for a $50,000 loan because the amount of work that the bank needs to put in it's not worth the money, right? So where can you go? There's very, 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 very few places in a lot of settings when people just don't have access to financing where it matters, right? Go to developing country, even worse. Those macro loans that you see people winning Nobel Prize for, it's basically shadow banking, right? It's basically a credit market where there's a reason why people need to have access to credit, but they can't because the normal banks wouldn't bother with those people. But in collection, they make sense. There's many, many, many of those examples. So what DeFi and crypto does is that, one, it essentially opens up access and remove the whole concept of national borders, right? It's like the internet approach to money, which is that, let's say, in a better world, where we have more infrastructure built in place and more regulatory in place. Let's say I'm a single mom farmer in Bangladesh and I need $250 to do something so I can make a better life out of myself. Is there any reason why I couldn't ask that $250 from the whole world? And this is the thing that crypto and DeFi allows you to do. It's like instant access to the entire world for financing. And sure, like the bank in Bangladesh might not want to lend money to people like this, but who knows, maybe there's a Norwegian billionaire who's more than happy to take that type of a risk onto his portfolio for diversification purposes. Why can't you do that? So the type of, it's a bit like how internet opened up access to e-commerce to merchants and have shocks on supply chain. I feel like DeFi and crypto will be a great place to basically do the same thing for money and financial markets. Right. Like it's about open access. It's about open innovation. It's about anybody with a great idea can do anything. We've seen in crypto over and over again, some guy in a basement with a great idea would have like billions of assets loaded up into his product in a matter of weeks. And this is just the type of thing that's not possible. Now, whether or not that's a good thing or a bad thing, that's the other way. That's another discussion. But one thing that is good for is that it fosters innovation. It fosters faster pace of new things being introduced. And essentially in the same way that in academic world, you have essentially a peer review system where you have other people try to validate your thesis and your results. Basically, you're doing the same thing for the whole world, right? The entire global community of crypto users will tell you, hey, your idea is absolutely crap if it's a bad idea. And if it works, it all works. So that instant feedback for innovation is super, super important. I just don't see how that works in real life. Like if Oslo Banki were to launch a new product, you might run a pilot programming portable to like 30 people or something. It's just not the same thing, right? So that's where I see the biggest innovation. It's about access. It's about having new things. It's about giving people the tools to do what they want to do. If they have a great idea, put it out to the world and see what happens.
Kind of it's a now as the time is running, kind of it's not such a fascinating kind of a topic area, kind of for many reasons, kind of. But as the last kind of a topical thing, kind of you make it sound that kind of and it's possible, but I never thought about that kind of, but kind of as you refer to the Nobel Prize that was awarded to the founders of the microloans.
Yeah.
It was not a Nobel Prize in economics. It was a Nobel Prize in the peace.
Yeah.
So it's kind of whether that will happen in cryptocurrencies, that whatever cryptocurrency kind of founders will one day kind of be awarded Nobel Prize in peace. Today, I would say that no, I can't imagine that, but you make it sound.
Well, nobody thought anyone was gonna give Obama a Nobel Prize for doing that. That's what they. So,
but he got it, yeah. So Eugene, kind of so I'm so grateful that you had the time kind of to join us and kind of thank you for your material, thank you for your lecture, thank you for your
pleasure, so mine.
Supplementary material. Kind of it was so fascinating. I talk about the financial advantages. So much is going on that kind of that it's to say the least fascinating. I want kind of thank you so much, and I guess we all kind of wish you kind of best luck. I don't know if it's luck, but kind of it's so fascinating to see kind of the development of your company, which is on a global kind of, that's truly global company that you are running.
Yeah, like national border doesn't mean anything for
nothing. So kind of
you start the day with the South Koreans. Then you move on to South Africa, then you end up with Brazil. Like that's like our day every day. And also from my side, thank you so much for all of you guys on the line, and Vesa for inviting me over. And for all of you on the line, I would like to also put a plug here. So which is that we're currently hiring quite a lot of kind of analyst type of positions, and also internship for the summer. And I think I just counted out of like the 15 people or so commercial folks that we have at Tesseract, about 70% of them actually came from golfers. So basically, folks like you.
Okay.
Some of them are even I think third or fourth year students. And when they started with us, they are second, third year students or so. So, and we're always looking for like a smart people to join us should you be interested in this. So if any of you think like what I talked about today is something that you want to get a deeper interest into, either reach out to us directly or just tell Vesa that you're interested in having a chat for, like we have plenty of job advertisement on our website. So please go ahead and putting an application, or if you just want to see what a startup look like, always feel free to swing by office, have a cup of coffee. We're always happy to meet the next generation of finance professionals, if nothing else. So and Vesa, you can come for a coffee too if you want to.
Yeah, but do you have an age limit as you talk about the next? But do you have an age? Is 55 too much? Okay. So
for you, exception. For you, I'll make an exception. You're more than welcome to come.
It's so nice to hear that you are growing kind of and looking for kind of a good talent that then definitely kind of that is something that Kaupis can offer.
Yeah.
Kind of a warm thanks. Kind of it was.
Thank you so much. Thank you.
Great experience.
Yeah. All right. Have a good one, guys. Take care. Bye.